Hey everybody, Jonathan Broadbent here, your host of UnWoke Academy. Ask your questions and I will work to get them answered. I had a video, it was actually pulled up, it was shared with me by an alert reader talking about active and passive strategies for investments. And my plan was to try a little something new and share that video clip with you. It's about an hour long, but trust me, I was not going to share the entire thing with you. But I was going to share about 2 minutes. The speaker and the two people hosting were an interesting dynamic. And since it's not working and I had to just close out of Facebook, it was just sitting there like trying to reload or something. It just ate my memory and hard drive on my computer, which is surprising because I've got a pretty robust system here. But you know how YouTube is. It's got all the creepy invasive stuff. But don't get me started on that. I will sort of paraphrase what I saw in that video that was sent to me, and then I'm going to lead that into some conversation. If you were at all exposed to the investing world, by the way, also, if you are in Substack, yes, that is live, feel free to post in the comments on Substack. I will see those also. That's still fairly newish. We have to do those in tandem simultaneously, but that does give us now 5 platforms where we can live stream this discussion and get people talking. We need to be talking a lot more about what we fund and what we want the future to look like. So bear with me a second here. I'm just going to briefly recap where we are, who we are, how we got here, and where we go from here. I started UnWoke investing a long time ago to fight back against what I consider to be a far left narrative. It is a political agenda that invaded Wall Street. And yes, I am ex-Wall Street myself. Please don't hold it against me. I actually thought early in my career that getting my way onto working for and with Wall Street would be some sort of great, wonderful accomplishment. But lo and behold, it certainly was not. It turned out to be not at all what you would expect. It was not the level of competence and skill, intelligence that any of us would be would hope for. In fact, I found all sorts of things while working on Wall Street that I started to, I don't know that I thought of myself as a whistleblower at the time, but I definitely started to flag some things that I was discovering on Wall Street as inappropriate behavior. And then the more I started to look at it and talk about it, the more red flags went up, and I got into all sorts of conversations. And there was just this strange sort of lethargy from those around me who I thought on my way in were, these great, intelligent, competent professionals, and they would just sort of shrug their shoulders. Almost pretty much every one of them. They're like, well, that's just the way that it is. And, I get these canned comments like, don't blame the player, blame the game. The game is rigged and stuff like that. And it was just terrible. I'm like, how are we ever going to fix anything if everybody in positions of authority and power just shrug their shoulders? As I was bringing this up with people around me on Wall Street, just saying, hey, look, clearly this isn't right. This is an absolute ridiculous violation of everything that we know. And I get these people that were just like, well, we make a lot of money. That was basically the answer that it kept boiling down to. That led to UnWoke investing, where I've been pushing people, really, namely, overwhelmingly, a lot of my focus is on my people, the people that work in finance, to get back to some sanity. And we need to have some of us willing to fight back. And you know me, I like to use analogies. Using the analogy of schools and school boards, many of us have come to the realization that we have government-run schools that are not at all. They're preposterously overpriced, and they're not doing at all what we, the public, we the people, parents, families, and communities should, would, or do hope for. So it boils down to getting the right people on school boards and willing to fight back and advocate for childhood, children, and education in a very similar way in all these environments where we're able to point to things that are corrupted, crooked, broken, or bad, it takes people with the courage and wherewithal to stand up, raise your hand, and say, this isn't right. Let's not do this. Instead, let's go back to what works and truth and reality. That formed UnWoke Investing, which turned into UnWoke.Academy. We've had the great fortune of now we're a little over 21 million views for this so far. That's spectacular, and never knew to expect that. And we've had some great guests. We've had a lot of really active conversation around the investing world and what we fund. I know it can seem a little bit daunting to venture into the investing world and talk about it, but we need to do that. And we need to be clear, honest, and transparent about what it is, what's broken, and how we fix it. And a starting point is at least some basic understanding of where we the public, typically interact with Wall Street and finance. And that is my job, as I view it, is sort of that introductory, bite-sized, understandable, keeping things in lay terms so that we can then go on to further conversation. To begin with, the idea of capital markets, when you think about where we invest our money, if you have a 401k or IRA, it doesn't matter. If you're investing money somewhere, the chances are very good that you are going into funding companies, plural. What those companies are and what they represent to the world in the future should be front of mind for more people than it is. We've allowed ourselves as a population, as a society, really globally, to allow our money to shift into focusing almost exclusively on far left, ultra far left globalist ventures. I've talked about it before, and yes, if you haven't seen the episodes Globalist Bubble and Parade of Woke Sameness, go back and watch those. Those are a good sort of entry point if you haven't watched those already. And I talk about that, I show it, and I prove it. And things like mutual funds are our typical avenue into that. Mutual funds give us that sort of check the box, out of sight, out of mind avenue to let our money be funneled into whatever somebody else wants to invest in. Overwhelmingly, and again, I'm not just saying this off the cuff, I have proved this significantly again and again, repeatedly. The overwhelming majority of the typical managers, investment managers, and that means mutual funds and all the things like them, they have allowed themselves to be steered into investing your money, our money, the US dollars and otherwise, Western, Eastern, Middle Eastern, South American, all over, massive, unbelievable, unfathomable, huge amounts of money into the left. So mutual funds are supposed to be a place where you're trusting some manager to act on your behalf. It's supposed to be an arena where your 401k or IRA or whatever, you can check the box and know that whatever such and such manager is going out into the world and doing the right things by you. I continue to prove that that is unfortunately, overwhelmingly, a fallacy at this point. It's not true. It's actually not happening. We have many, many managers out there who have, I can't speak for them. I don't know what led to this disconnect in their minds, but they've allowed themselves to fall into this trap of thinking that they don't have to compete in the overall marketplace. They don't have to try to do better, find better research, find good investments, avoid bad investments, and do all the things that you absolutely should and must insist on for yourself, for your 401k or union pension plan or whatever, your church savings plan, whatever it is. I don't care. Any pooled investment, anywhere. You and we should be demanding of them that they get back on track and do the right things. How we define right things is actually easier than you think. There are lots of conversations that can take place, and you should, if you have a set value system. If you are, for instance, extremely patriotic and you believe in make America great again or America first, if you are religious and have a value system, those should be applied in your terms. But prior to that, there's a much easier answer that applies to everybody, everywhere on the political spectrum, and that is fundamentals. If you're investing somebody's money, if you run a mutual fund or something like it, if you are in any way, shape, or form managing money on behalf of other people, have definitions, have a strategy, have an investment philosophy, and publish it. It's really as simple as that. And you could go ultra far left. You could go into the climate change agenda and all those things. I don't agree with those, but I do believe that people that do believe in that should have a home and define that and be articulate. If you are far right and very conservative, define that and then show people that you are actually doing what you say. What we have is this insane environment where lots of things have this label, and I can't find any that are actually a true label, or I can't say any. I can find very, very, very few that are an actual label. So if they say sustainable fund or environmentally, whatever, fill in the blank with critical race theory, DEI, with the environment and the environment, social and governance, ESG for short, all of those, when they have that label, as soon as somebody like me with any degree of training goes in and starts asking questions, it evaporates. It's a veneer. It's a false label. It is a trick played upon society. Thankfully, as a side note, we are seeing some catch up. We are seeing some backlash. And I think that's a great thing. I've mentioned them before. We've got the New York City Workers Union, American Airlines Pilots Union, I think 21 different state attorneys general, Secretary of State from Indiana, I want to say, and a great handful of others who are now actually taking the time to either sue or write letters admonishing managers, telling them we can't have this anymore. You cannot go out into the world and slap a label like ESG friendly or something and attract money without defining that and saying to the world and to us, the investors, whoever has the billions of dollars and ultimately trillions invested in those things, what is the problem that you've found and how do you propose to fix it? If instead of simply investing based on tried and true investment fundamentals, which is it a good investment or a bad investment from a dollars and cents standpoint, if you're going to replace that with social justice, I think you have to have your fist in the air. Social justice, yeah. If you're going to have your fist in the air and claim social justice, what does it mean? What are you fixing? Because if you don't define it, nobody can ever evaluate whether or not you're doing the thing that you're saying. And what we have are websites and quarterly reports and update phone calls and everything that are just fluff and fiction. They're like, yes, we're accomplishing the social justice. We're going forward to proceed with the fixing of the problem and they just throw out a whole bunch of just fluff and rhetoric. And meanwhile, people like me are able to look under the hood and see what those investment pools, things like mutual funds, are invested in, and they're virtually identical. They're all doing the same thing over and over and over and over again, putting giant pools of money, your 401k, under all kinds of different labels into the same or virtually the same very small number of companies that check all those green boxes, the social justice boxes. Well, that's not okay for anybody. My job, literally, for over 2 decades, has been to train the world. I've trained treasurers and state administrators, and I've done tandem conferences with all kinds of people training the world on how to do it the right way. The right way is, and I'm sorry, I got to lift the hood. I'm going to pull back the curtain a little bit here on my world and the way this works. Bear in mind that I work in institutional finance, so my conversation is going to feel a little bit different to you, probably, than a typical wealth manager. People who work on the other side of the aisle from me in wealth management, that's like financial planners and personal, they work with individuals and families. I've a lot of great contacts and friends there. In my world, I am constantly on the lookout for the best interests of managing money on behalf of other people. So let me put that in a little clearer terms. If you have, let's say you've got $10 million, hoorah, poof, congratulations. For today's conversation, I'm gifting you an imaginary $10 million. If you have $10 million, you can do anything with it you want. You're an individual. You are on behalf of your family or personally, you could go out there and, I don't know, you could invest it in um, exploratory migrating tree frogs or who knows, whatever, coins. There are people that have invested in like extreme coin. By the way, none of this is investment advice. I'm not advising to invest in any of these things. But with your $10 million, your imaginary $10 million that I just gifted you, you could do anything you want with it. If, however, you are the trustee of your township or your church or some sort of a club or something, you have to act very differently. You cannot just sort of throw a dart or decide to invest in whatever whim you have. You have to have reasoning, and it has to be justifiable, because there's a group of people that will show up, or should, periodically to say, explain to us why you made these decisions that you did. That's my world. That's where I've worked for decades, is helping to get people set for that conversation, to encourage and train them on how to use actual fundamental philosophy and develop one. For anybody who's a little bit nerdy like me, that's typically called an investment policy statement, or IPS for short. Developing, managing, and monitoring IPS is critical. When you get away from any individual or family, who, again, you can do whatever you want on your own behalf, you can take guesses, you could throw a dart, doesn't matter. There's nobody to sue you. There's nobody to hold your feet to the fire. But as soon as you venture into the realm of you managing money on behalf of somebody else, there are very strict requirements, and you have to button that up with a process. We don't have that. It's overwhelmingly evaporated. And trust, my trust in the traditional Wall Street is shaken. Admit it. It started to be shaken when I was working on Wall Street over a decade ago. What was that, 15? When did I leave? 16 years ago. I left Wall Street 16 years ago. Hard to believe it's been that long. But I started to see that those processes were crumbling, and they were sort of eroding back then. And not enough people were willing to step forward and throw the brakes on and ask more questions. So we've ended up in a place where bad people doing bad things felt like they could get away with it, and they did more bad things, and it got worse. And now we have this video that showed up. And again, I don't know if I reopen it. Facebook was acting a little bit wonky. It looks like we have more people joining us. Welcome. By the way, if you have any questions, if any part of this is unclear, you have a question, be more than happy to hear from you. Just post it in the comments. I'll try my best to incorporate that into the discussion. If you can't or don't want to, feel free to send an email to info@unwokeinvesting.com. Out of this whole process of discovery, the financial PMA came along. Because, of course, as I was doing whistleblower stuff and exposing firms for not doing the right things, and instead putting this veneer of like sustainable and ESG and DEI and stuff on their investment pools, I was asked by a lot of people, where are the good guys? Where should we be investing? Ultimately, and I understand you may not like this answer, but you have to know it. You have to know this answer. The only real good, solid, tangible way to know what you own is also the way to get rid of management fees and what are frequently extra layers of fees and costs. And that is by building a portfolio. Our grandparents did it. It's going back to what we know works. Before the mutual funds and all the other things that came after, unit investment trusts and exchange traded funds and collective investment trusts and all those different types of manager structures where you're giving the rights and authority to somebody else to manage your money on your behalf and giving them all the voting rights and everything. Before that existed, our grandparents built a portfolio of direct investments. They invested in companies that they could believe in, and they saw those companies. And then really exciting things begin to happen for anybody that does take that step and go back to what we know works. The investment management fee disappears. We also know that you can go UnWoke tangibly. By the way, UnWoke is not a product. We're a research tool. We do research and report on it. But by building a portfolio of different investments, you can get a diverse mix of companies that you can actually track. You can see them. You can understand what you own, and you can see the value. And you're eliminating, as I said, those investment management fees. In mutual funds, the fee, they're always opaque and hard to figure out. And I understand that. The world of finance, I've spent decades unraveling that and making it understandable to any layperson. In the world of mutual funds, it's referred to as an expense ratio, or E/R for short. If you ever see E/R and it's like 0.5% or something, that's the fee that continues to erode off of your investments. So there's another dynamic, and that's the video that was shared with me by an alert reader from YouTube that talks about the growth, not just into, or not growth, but the, what do I want to say, regression, and the migration out of having a portfolio that we know and can understand into things like mutual funds. There was a next step, which was going into what are called passive mutual funds. And we've been conned and duped into this ridiculous philosophy, this ridiculous notion that things like the S&P 500 are somehow by themselves the market. The S&P 500 is actually 503 issues out of roughly 16,000 companies you might invest in, which means if you're one of those 503 companies, hoorah, you've just conned the whole world into thinking you're really the only place that should be invested in. And you're going to recognize the names: Apple, Microsoft, Amazon. You've got all those usual suspects, and they are so overfunded. They love the idea of virtually everybody getting pulled into over-investing in them. And of course, let's get back to what works, the fundamentals. In a real world, you get society as a whole, humanity, deciding what's an appropriate price. Is $10 trillion per share for Apple. I'm clearly exaggerating. Is that reasonable? How about $50 trillion per share? That a long time ago, it passed up being reasonable. And again, I'm going to use that analogy. I've said this a few times. There was an economist I was listening to in a webinar about a couple of months ago, who made the comment that if we believe, and I'm just picking on Apple for a moment, but most of them are the same. They're overfunded. He said in this webcast, if you believe in the current stock price of Apple, then you believe that we will all live in Apple homes, drive Apple vehicles, stream Apple services, and wear Apple devices. It's not going to happen. It's ridiculous. It's egregiously overvalued. So as people got into mutual funds and said, okay, sure, hey, fund manager, you invest my money for me, vote however you think is appropriate, and I'm just going to go over here and pay attention to my life, and you go ahead with it. That gave free rein for decades for trillions and trillions of dollars to get invested further and further left, and nobody ever balked. Hardly anybody ever pushed back and said, why are you investing in things that some of them are clearly, absolutely, blatantly anti-American and work directly against American interests, which means your interests? Nobody fought back. Hardly anybody. Well, now we're in an environment where the con is, it's got to be. I really think that it has to be just about played out, because with this notion that the S&P 500, again, that's 503 issues, that the how do I want to break this down? There are, I believe, 8 companies that represent roughly 40% of the S&P 500. Those 8 companies, and again, Apple, Microsoft, and that cabal, if we as a society think that that's the only place our money should go, is to continue to drive up ridiculous astronomical overvaluation of those companies, then we've set ourselves up for significant harm when those drop and reality sets in, and they have to come back down again to wherever is reasonable. But at the same time, as I've said before, we have turned a blind eye to the other, whatever it is, about 16,000. I think actually from a previous show, I came up with some notes. Here they are. I've got them. I put all my notes here on my desk for this show. We've got, let's see, New York Stock Exchange, about 8,000 issues. NASDAQ, 3,890 issues. Chicago Board of Options Exchange, 3,900. So you get 11,890. Let's just round up and just call it. And there are other exchanges, other places where stocks and issues are bought and sold, but let's just call it 15,000. So if you believe that your money should be funneled into the S&P 500 or something that tries to duplicate it, why are we agreeing that the other 14,500 companies out there don't deserve any money? It's called capital markets for a reason. Let's capitalize those companies, because if we capitalize those companies, and again, this is an appeal to the whole political spectrum. If you are at all a fan of middle America, small business enterprise, freedom, economy, whatever, any of those things and all of it, why aren't we, at least some amount of our money, fighting our way past that narrative that the S&P 500 is the market, and getting some of our money to those businesses that need it most? Those companies out there, they desire it. And you know what I'll do in the show notes? I'll go back and bring up that YouTube video. I'll try to timestamp it. I think it was right around 4 minutes or something. And I'm going to tell everybody, watch 1 minute of this thing. Or if you have the time, watch the whole thing in speed. But these are people, they make some good points, but unfortunately, and this is kind of a tangent, I think I'm going to do a whole episode on this. Um, I'm going to do an episode, I think I have to, that focuses on what I'm discovering in conversations with other financial professionals. Where I sit, working in institutional finance and having the focus that I have, it puts me in a position to interact with a lot of people all across the spectrum in the world of finance, from banking to institutional management, a lot of fund managers, most everyone that you've heard of, some that you probably haven't, and a lot of my counterparts on the wealth management side. In fact, it's earlier today, I was speaking with a pretty high profile wealth management shop, and we ended up with some fundamental disagreement because where I think I need to focus, and I think I'm going to dedicate a whole episode to this, is to a certain extent, many of my people are the Kool-Aid drinkers. We came up and were trained in this environment that continues to sort of pound down our throats. Product, product, product. Gather assets, acquire money, bring it into one place, sell as much product as possible because that's where the profit is. And whenever talking or discuss or analyzing, talk about the markets being S&P 500 and the things like it. And for the life of me, I actually really struggled. And this person, I'm a seasoned veteran. I've been at it for several decades now. And this person is a little older than I am, and predates even me. And that it's so ingrained in this person I was speaking with to think in terms of the S&P 500. Well, the S&P 500 is up, so why wouldn't that be a good thing? And navigating to a point in the conversation where we can agree to talk about what's not being funded and the inflated risk, the bubble nature of overfunding that small number, 503. If 503 issues in the S&P 500, if they get 90% of the world's money, they can't possibly ever justify that value. They can't. It goes back to that Apple analogy. The whole thing, it's quicksand, and it's not truth. There's no truth there that I can find. There's nothing there. So I'm double checking now. I don't see any comments to include. Again, if you do think of something later, or if you watch this video on a replay and think of a question, send it to info@unwokeinvesting.com. That'll get my attention. I will try to answer what questions I can. But again, we've got people who we took those blinders off and stopped thinking in terms of the S&P 500 being like the investment and started thinking in terms of good companies out there in all kinds of different markets and industries all over the place that are positioned well to hopefully do well. And we started delivering the advice and guidance for that publicly a long time ago. All kinds of different companies. And I've had them up on charts. You can read behind me what we're looking at, what we like, why, the reasoning, the methodology, everything we make public. And everything that we do to research, I make the research, I record it using publicly available resources like morningstar.com. That's a good website. I think you should check it out and be aware of it. I do all this in the hopes that more people work together to defund the woke, because you should know where you donate, invest, and spend your money. We call it dis the left, dis the globalist. Know where you donate, invest, and spend your money. For those interested, We set up a financial PMA. It goes a little beyond that. It takes the research and deploys it, but we're also working to fight back against the massive amount of data mining that takes place in the financial world. Just trust me when I say that it puts cell phones, those smartphones, to shame. It is so invasive, the amount of data mining. It is aggressively invasive, and it's growing like a cancer. It's like a weed. We are working very hard within the financial PMA to carve out and create for ourselves some semblance of privacy, some direct ownership, and answer the hard questions like who actually owns the assets, and are you a beneficial owner? If you're following the David Allen Webb books, that will make sense to you. Those are the things we're doing inside the financial PMA. For anybody that's interested, we made the price point so low that we would make it a no-brainer for people that do want to come and join us, because we're hoping to move the needle quickly on defunding the woke. Get people out of harm's way, get them out of this concept that the S&P 500 is in and of itself somehow the market, which is hogwash. It's completely ludicrous to speak in those terms. And get them into things that are better, that align with their values, because that's really ultimately what you'll find. If you go to financialpma.com, that's our website, you'll see that we are aligned with a certain investment philosophy. And if it's not for you, take the idea of it and go somewhere else. Recreate that, recreate what we're doing, and make it your own. Start a financial PMA, get people with financial background. Doesn't have to be Wall Street. My background is institutional finance and Wall Street. Anybody and everybody. There should be a lot more of us forming these and creating our own private membership associations. And of course, a side note on that, if you're not familiar with the term PMA, private membership association, go do some web searches. I suggest Brave. I use it instead of Google, but whatever you use, you'll find great research into private membership associations. They've been around for a long time. I just believe that we are the first out of the gate to apply a private membership association to finance. That came out of weaponized regulators, but that's another topic I've covered before and will continue to cover in the future. For now, I'm going to wrap things up. Hopefully, you've found this discussion informative and interesting. Again, I'm just skimming here. So I see some notes, but that doesn't appear to be a question. Welcome, everybody. The plan is to go live at noon Eastern Time every Wednesday on Substack. We're on Facebook, YouTube, X, and Rumble. Bring your questions, bring some friends back, and join the conversation. In the meantime, I hope you have a great week.